This week, Mastermind, we found about 10 different ways that we can compete against RBC when you have some of those deals that you're in competition with a big bank like RBC. Number one, Shannon says that terms must stay. We have lenders like TD Bank where the terms can be shortened when you're switching from a variable to a fixed rate. So TD is unique about this. So that's one or the first way you can compete against RBC. With RBC, the terms cannot be shortened. We're switching from a variable to a fixed. Amy has the discussion about prepayment penalties and posted to posted versus posted to discounted or discounted to discounted. What that means is that if you have a client that has a big probability of breaking their mortgage, and by the way, statistics say that about 60% of clients do break their mortgage. If they go with a lender such as RBC, the penalty will be way bigger than some of the lenders that we have at the broker channel, where you have lower discounted prepayment penalties on fixed rates. Number three, this is a big one. When you have two applicants or more and RBC, one of them passes away, RBC makes them requalify for the mortgage. And if the income is not enough, they will have to sell. That's a big one that I didn't know. So be aware of this, because if you explain that to clients, they will think twice. Of course, we have the discussion about mortgage insurance, mortgage life insurance, but that's another aspect. Some lenders will not requalify the loan when one person passes away. Another one, I had experiences where people want to have all their eggs into one basket, all the accounts, let's say with RBC. It's a big risk. Don't have all the eggs in one basket. When things go right, it works really well. When things do not go right, a lender, and you will talk to your client, this has happened to many Canadians. The lenders may froze accounts if your credit is damaged for whatever reason, and they see that your credit is in bad situation. They can froze lines of credit, increase credit cards, take away features, and because you have all the eggs in one basket, you have no solutions. It's always good to diversify with lending institutions. Another one, there's been Jerry or Amy talk about sometimes because they register, let's say, a home line, when they go for subsequent loans like a car loan or another visa, the clients may not be aware, but the lender may register that against their collateral charge. So that's a big important one, because now that car or visa will be secured by the equity in your home. Or I think some contracts allow that to be happen if they later in the future. So that's another big one, because you don't want, again, sometimes you may not want to have as collateral your home for other loans that should be unsecured. So this is a big important reason why we can have that discussion. Another important reason, RBC only allows 10% prepayment, and it only allows once every 12 months. So that's a little bit restrictive. We have tons of lenders where you can go 15 or 20% without so many restrictions. So for the right client, that might be a good point to raise. Another one, Roshan was saying that RBC has a very good RBC business for self program that can take 65% loan to values or under, and they can use 3 times their NOA income. And then Kyle and Steven pointed out that we do have that program within the broker channel, for example, with First National, and it's a Sagan product. And I believe you can do again from 2.5 times to 3 times. So we do have a similar program if you need to use that program. What other points are we talking here? Clarence, typical of Clarence. I know we don't do that. We don't badmouth big banks, not RBC, not any other lender. Just keep it professional, but do explain the differences, because people need to know what are the difference between options with lenders and with mortgage brokers. Marco also said about pick your battles, because sometimes the branches or whatever will do whatever it takes to retain the client. So sometimes, even though we have lender choices, it may be the best for the client to stay with the branch. So just be mindful that the client is always first. Kathy said also that brokers have so much to offer. If any of you watching this video were a mortgage specialist in the past, like I was, we were very restricted with options. Even if the turnaround times were not very good with the lender that we used to work with, now you have no other solution. As a mortgage broker, at least you can go to other lenders, and you do have other options on A, B, small commercial, whatever. So our value cannot be matched by only one single institution. One of my own advice for anybody listening to this, lose the battle, but don't lose the war. What does it mean? Keep always a great relationship with your clients. There have been so many deals, even with RBC, that I've lost on the first chance. And then they go to RBC, and then I keep in contact with them, and they come right back to me. Why? Because I show them options. I show them what is good and what is not good for them. I create a strategy for them. So they value that advice, and later they decide to both refer me clients or renew with me. And Martin, especially for renewals, he always asks, what do you like or don't like about your existing lenders? And that's important because you don't know if the person going to the bank has had a positive or negative experience with them. And that's all for now. Next session, we're going to discuss about how to compete against discount brokerages. All the best.